You were listening to ChartingWealth.com for Tuesday, March the 1st, 2016, moving into another month. And we see the market on our two-day chart continues to move up, up, up. This is IYY, which is a total market ETF. It tracks the entire stock market. It's put out by iShares. And what we see going on is starting back on the 16th of February, the market started moving up, and as far as the two-day chart goes, it's not slowed down. We have a nice two-day trend line. The market is still above. Now for the day, when we look intraday on Monday, what do we see going on? Well, the market was down 0.73%. Started off going up in the morning, down in the afternoon, still above the two-day trend line, maybe getting close to a crossover going down. Why is that important? Well, we want to see a crossover going down like we saw back on the 5th. If you look back on our charts, you can see where the market rotated over on the short chart. Once that occurs and we see the market kick back up again, as long as the big chart, that is the two-day chart, is still in an uptrend, it's a good safe time for us to look at getting into a virtual trade on an up move. There's still plenty of room between the Bollinger Bands for the market to continue going up. Now, is that necessarily going to happen? No. It's not. None of this is written in stone. In fact, the market could roll over hard on the short chart, that is the 4-hour chart, and it could actually drag the big two-day chart down with it. We'll just have to wait and see, won't we? Now, after taking a look at IYY, the total market, we always go next to the S&P 500. It has been moving up since the 16th of February also, but it has had a couple of days of red open down candles, or I'm sorry, two-day periods of red open down candles. The first was on the 24th of February, and the second two-day candle open red box is on the Monday the 29th of February. Derivative oscillator lost a little bit of speed over the last day or so. However, the MACD and the signal line are still quite far apart. Now, if we look at what's going on the short chart, that is the 4-hour chart, we see that it rolled down substantially more in the afternoon, went down a lot further than it ended up at the end of the day, but we almost have a crossover going down on the S&P 500. It technically was down 0.82% for the day, still above the two-day trend line. We shall see what we shall see, but right now we don't have a trade. Now, lastly, we're going to range back out to our two-day chart. As far as our indexes go, we're going to look at the Qs, which is the NASDAQ 100. What do we see going on there? Well, the Qs, again, crossed over a little bit later than the total market in the S&P 500 around the 18th, and it's been moving up since then, except for a little bit of a down two-day period on the 24th, that two-day candle on the 24th of February. We have a two-day trend line. We're continuing to move above that. The market itself for the NASDAQ 100 was down 0.86% for the day, not quite a percent. If we look at the 4-hour chart, we can see up moves in the morning, down moves in the afternoon. Not yet crossed over, going down. Derivative oscillator losing speed, still positive though. That is where we are in our indexes, still above our two-day trend lines on all of them. Lastly, we're going to take a look at what? Gold. So we're going to revert to our two-day chart. Going to go to gold, which is up 1.3% for the day. Gold's been sliding sideways. Our two-day chart crossed over going up back on the 16th, and it has been a ride. Slid sideways for a while, bumping along the low that gold hit around $100.50 a share on GLD, which tracks gold at 1/10 of its value, and then started moving up around the 5th of January, then slid sideways for a while through the 21st of January or so, then started moving up, rocketing at points until it reached its high on the 12th of February rather. Hopefully those of you who had jumped into a virtual trade got out then, took your money, and have been waiting to see what would transpire. Well, gold again was up 1.3% for the day. Now, what we're going to look at though is what our signs were. When gold crossed over going down on the 16th, it really slid sideways for the rest of February, still sliding sideways. Hasn't really risen above. Well, it did for a moment, rose up to around 118, 119, but it's pretty much stayed around the level of 117, 118, and closed the day somewhere around 118.63 and was up, like I said, 1.3%. Still don't have a crossover going up on the MACD, so we don't have anything that's telling us that we need to look at getting in as far as the 4-hour chart goes. And again, we're not feeling super about any trading decisions on the 4-hour chart. If it does cross over going up and the 2-day chart is still in the green, still moving up, you could of course use our trading rules to get in at that point. Still in the negative on the derivative oscillator, but could cross over. You have another day like today. We are at the top of the Bollinger Band. When I say today, I mean Monday. But the Bollinger Band can always widen out, but has a lot more room for down moves, still above the 2-day trend line. So continue to watch gold, see if it gives you any opportunities for doing a virtual trade. Now, if you don't have our How to Read a Stock Chart video, you need it. You also need our layout that we use at freestockcharts.com. We give you both of those things for free when you sign up for our daily stock chart review. And how do you do that? You go to chartingwealth.com. Put your first name and your email address in the boxes, and we will get that information out to you. That's all you've got to do. We love to hear from you. We love to know what's on your mind, questions, concerns you have. You can follow us on Facebook, Twitter, YouTube, Instagram, you name it. We are there at chartingwealth.com.